Welcome everybody to Saturday's gold analysis. I'm going to be looking at some other pairs too. I've been starting to trade other pairs, but mostly gold still. Like if I look at my log. So let me pull that up. Let me see how many times I traded gold and how many times I traded other pairs. So since the streams have started, actually I've been logging since June 12th. So June 12th, gold. I have 10 gold trades and 2 trades on other pairs. That's how much I like gold. My 2 trades on other pairs are winners though. It should be 3. I didn't really log my Euro USD one that I had earlier this week, but like gold's been solid. Except some of the trades have been like over leveraged. Bless me. Goddamn, excuse me. Yeah, my 2 non-gold trades have been pretty good. 3, if I include Euro USD. My gold trades have been pretty solid and consistent. The losses were heavy though, I'll admit that. I had 3 on the Tuesday when the stream started, and then 2 last week, but I recovered pretty nicely. That was a quick overview on my trading gold. But yeah, without further ado, let's get started on this gold analysis, as well as a quick breakdown on other pairs. Turn this music down a little bit. Make sure you guys can hear me. And let's go to the live screen. Let me get Forex Factory ready as well. Let's go Monday to Friday. Perfect. I'm gonna put that there, beside there. Okay, let's get started. So here is the monthly chart on gold. As you can see, 17. Oh wow. Okay, let's go all the way back here. We're getting to highs that we had previously in 2012, 2011. Yeah, those months. Right, so you get an area contention, basically 1773. This whole area at this point, what was the high of the wick? So 1795, 1800. So the highest wick was here at 1800. Then you have like a 1795. Can I check open, high, close on this? Come on. I can't, but whatever. I mean, it's pretty easy to tell if we just zoom in a little bit. So you get the high on this wick about 1800, I'd say. Whole psychological number. This wick about 1790. Right here, this wick is about 1785, 87, 85. Pretty sure that's 1790. So 1795, 1790. 1785, 1800. So those are areas of contention there. What about the body right here? This body is pretty good. 1771 area, yeah, it's the monthly body. Okay, so now we have those levels in mind, right? So I go slow. But now we look at this chart from a holistic point of view. You have this huge run up in gold. This is a financial crisis. You see this liquidity grab right when it started. And look at this bull run up. Right after the 2008 financial crisis hit, you have this big bull run up. 2008, October, this was the month it hit. That could be the same thing for March 2020 when the pandemic and the recession hit, right? But what do we see? We try to like use history as a reference point. So we have November, bull candlestick. This one, April, big bull candlestick. Then December, same thing, bullish candlestick. And then the next month, May, this one's a bull candle as well. And then we go to the 3rd month, January. That was a bull candle with the wick. June, bull candle with the wick. Usually after these 3 months, it will slow down. I'm expecting something like this to form. It's like run up all month and come down. While I'm looking at the monthly, it's almost the end of the month too. So with it being almost the end of the month, you could see a bull run to finish it off. Or, you could potentially see a sell-off to make this a doji as well. But just considering lower time frames from this monthly, it does look pretty bullish. Give me 1 second, sorry. Sorry, I have to make sure my dog didn't bark there. But okay, let's go weekly now. Look at weekly formation. This is beautiful. Start of June, you have this big liquidity grab. Literally taps into 1670s area, finishes 1683, which is a big level. Next week, bullish engulfing, and then June 15th week, liquidity grab to bullish finish, and then last week was just straight bullish candlestick. But now as you can see it, look how the weekly formed. Body above here, above the wick, filled it, body finished above. That's a big bullish candlestick. Now if we can go all the way back to see a reference point, 1751, yeah, that was an area over there. 1780s, 1790s, yeah, 1780s, 1790s. So there's a lot of traffic in this area. For example, I'm gonna have to draw the line on my chart. I will be looking back on that, my real chart too. But then you basically have like a lot of area contention there. Let me reverse. But after that, it's pretty clean to, I'd say, about 1900. I do believe we're still gonna hit 2000 by the end of the year. But you gotta play like intraday moves and whatnot, right? So we're back. Can I go on daily? That'd be sweet if I can get there. It's gonna be easier to do it this way. $20.12. It doesn't go that far back. Or does it? 2011. Ooh, yes, here we go. Yeah, this area is a big resistance, eh? 1791. So around like 1791, 1785 over here. What's this whole area? 1775. Interesting. But yeah, no, let's look at the daily. Daily, you had this big liquidity grab. That was really weird, but it kept its bullish structure. It literally tapped into 1751, one of our levels that I had, and then continued its move up. First started next week, I believe this move will continue up, fill this wick first, and potentially move higher, but I guess we'll see. As you can just tell by the trend line, it is still bullish. That you cannot sell gold, let's be honest. Unless they're getting like intraday moves, there's no point selling it. It is 4 hours, this is what I was talking about. 4 hour bearish close, taps into support. And this next 4 hour was up, and I think it was bad US market data that did cause that. We did have a sell-off on the futures as well. Quickly looking at the futures, seems like a second sell-off is imminent, like ASAP. Actually, 24,000 does seem reachable this week. Even fill this week, you have a bull run up, V-shaped recovery, steep sell, move up, creates a resistance, and then push down. So with that being said, every time the market sells off, gold usually does push up. Now let's go to my gold chart. Okay, let's go to the, let's just look at this from the hour standpoint, right? 1765, this is my big level of support resistance. This is a big level dating back to the previous high in May it created. As you can see, it blasted through it this week. It was a very nice blast through. We had this big range. When did this range start? 24th to about the 26th, so 2 days. There were good moves. I mean, it had these liquidity grabs. I was at 4 o'clock. Yeah, I guess on June 24th, 4 o'clock. This one, I remember this one. I caught this one on the way up. I was trying to catch it on these moves, but then bad data made it move up. It's been playing between the 1759 and 1765 range, but as you can see, the sharp sell off to hit 1751, and then the bull move up with bad U.S. market data. This was a nice sell off. I didn't catch that. Caught some of this buy at the end, but I gotta be more. Gotta pay more attention to the chart throughout the day. It's been straight bullish though. There is nothing. Yeah, just look at that. Look how it just taps. So if we go and draw just a quick channel, there's a high percent chance you're gonna see it hit like 1785. I will. 1 second. I'll be drawing out like higher levels as I see them. I do need to get the higher levels on these charts. One level that it did create, however, is this 17. Let me just draw a line actually. 1779. I even hit 1779. You know what? I will go 1779. Do that. Draw this bar. Whoa. So we still have a move that I could easily hit up here. 80. Let's go like that. And let's go like that. There we go. That's a zone that I like, because it just taps into the high above here. So that's a very nice zone it formed. Let's see where other areas. I guess maybe this area. Let me go to this chart quickly. Honestly, that might actually be the next zone up here on the hour. You might get something at 1775. That 1775 does date all the way back. Yeah, the 1775 is going to be an area of contention as well. Sorry, I just want to get my levels right for everybody and for myself for this week. That's 1780 on the weekly. So yeah, 1780. Got that. 1780, got that level. 1775 seems like an intraday level of form. It's tough when it's making new highs. You have to scroll all the way left to previous highs it has formed. Like here, 1780 is still that level. 1775 doesn't seem like a big one. Like if I did put it there, let me go within the hour. I think it's very minor, to be honest. 1774 hit. Maybe it's 74. 73 is on these wicks. That's a very minor level. I don't even consider that one, but you're gonna see some like contention here. Other than this move at the 1774 5 level, I'm gonna leave it open. I don't believe there is one. Yeah, I gotta really analyze it. I should have those levels drawn out first. But other than that, we do see a pretty big bullish structure on it. It's 1773. So if there's a lot of traffic though, but other than that, it's pretty bullish on the way up. These levels are obviously not perfect per se, but they're just a general guide on what to look for in trading within these levels on gold. Like as you can see, these two at 1759 and 65, that was a good 60 pip range I played within. It did work out in that. I mean, this trade I did get it like at 1758 on the way up and got out here because it's within a range. But other than that, let's get this analysis and what I'm personally looking for started. All right, so we did that quick breakdown, monthly, higher time frame, top down analysis. It's all bullish. Monthly's bullish, weekly's bullish, daily pretty bullish too. I mean, look at this bullish close above this resistance at 1765. So it has closed bullish. I don't trust this 4 hour, but let's go to this 4 hour. It is a bullish close as well. This 4 hour does show bullish too. Like, look at this 4 hour wick. God damn, that's a big liquidity grab. 1 hour, same thing. You can see that 4 hour broken down. Big liquidity grab. It took 2 hours to finish above, which was pretty crazy how that bull move happened. But there are, let's talk about fundamentals now. There are still coronavirus wave 2 fears. It's happening right now. There is no market stability. There's stagflation. Inflation's going higher, while economic output isn't really going higher. People are going back to work, which is a good positive. There's optimism in that. People are going back to work, but there are a lot of bankruptcies, businesses closing down, still unemployment rate is high. People are still filing unemployment claims, but one positive and optimistic side is that price of oil has gone up. Businesses are reopening. People are going back to work. Still a lot of people lost their jobs, but the biggest impact, in my opinion, is going to be this right over here. We reached 10 million cases today. Let's celebrate. This causes fear. This causes fear in the markets. It causes fear globally. As you can see, the USA, the biggest driver in global economic, as a big global economic indicator, in my opinion, has reached 2.5 million cases. This is not slowing down. And USA, none of these countries can ever shut down again. Look what happens when you have 3 months of shutdown. The world stops. The economy shut down and falter. It's a global system. How it works. Jobs were lost. Wealth was vanished. It wasn't really vanished, but there's a transfer of wealth from lower middle class to high wealthy individuals. So there's a lot of fundamentals that do indicate gold is on its way up. Like I was comparing it to the 2008 crash. We had these bull moves up. I'm expecting something like this. It does kind of look like this, except there's no lower wick on the December and the April month. But other than that, you just see this bull run up. I do expect to see 1800 hit next week. And then kind of like this doji form, because there needs to be a sell-off too. It's going to be July and August. Kind of slower. I wouldn't expect it to be as slow just because of what's happening globally. 1800 is like a pretty big psychological level in my opinion. I could see it hit that. Like if the weekly just pops up and then sells off after. We do have our levels on this chart. I have that 1780 level. And then above 1780 is probably going to be like 1795, 1800. I'm going to get that marked and I'll probably have that on the Monday stream of what level I'm exactly looking for. But 1780 right now is one of the big levels. Sorry, give me one moment, please. Yeah, 1780, 90, 95, 1800, like the big psychological numbers I'll be looking for. But it is on a bullish run up. When we do see a breakout like this, there is continuation higher, and it's compounded with market fear and not as much optimism. Coronavirus wave 2 fears, market selling off, businesses going bankrupt, businesses closing down, etc. There will not be a shutdown though. That much. I know that they can't be shut down again, but people do like to flock into safe havens. and gold is one of the best safe havens. You can see you have this big consolidation in this range right here, but after it broke out, it's breaking out like that, just tapping into this trend line and going higher. So to open up next week, we might see like a Sunday wick down and then a continued move higher on Monday, and then maybe even Tuesday too. You might get a move higher as well to close out the month. I do expect this monthly candle to finish pretty bullish, with a big bullish body. There is a lot of buying volume, that and what I said with the Dow Jones and the market selling off right now. Let me pull that up again. So here's a Dow. I use Fibonacci for this, but as you can see, it's selling off here. If you go to S&P, same formation. Nasdaq, same thing. Nasdaq is strong. Tech's always strong. Russell 2000, bearish momentum. So with all this bearish momentum in the market, and I think volatility index, volatility index is spiking as well. And now when we go to the dollar, another safe haven, you can see the dollar move up. Like the dollar and gold's correlation is really weird in my opinion. It's not really perfectly inverse or perfectly correlated. But even here, as you can see in March, dollar devaluation, and then boom, back it's locked into the safe haven. So I do expect investors to flock into safe havens. I expect this week to have a bullish start and then maybe sell off near the end of the week, depending on the news too. I have Forex Factory here we'll look at. So basically it's all bullish. I'll be looking for buys most of this week for sure. Like even Sunday I might have some buys, or even Monday morning I might be looking for buys. But let's say Sunday, hypothetically, we do have a lower test to like 1765, create some support. Sunday intraday, like this is a daily chart right now, but actually let's move it to intraday so it's more clear for everybody. So yeah, if we do see a sell-off start Sunday when the market's open, kind of consolidation and a break, I do want to enter here and hold it, have a stop somewhere down here below this zone that I've drawn out, and then just ride this bullish momentum upwards to 1780. That's a big if it happens. I do expect a weekly to form like that, have like a nice wick as a liquidity grab, and then continue to push higher. If we see that formation over here, when was this? Yeah, it's always the liquidity grab before pushing higher. Hey? 08 was a crisis. November, December. January was a bullish month too. Yeah, but as you can see, it breaks out and it just continues higher and higher. That was the last thing I could really compare it to on that weekly. Let's go to daily. Daily, yeah, bullish momentum. This wick fill is easily a possibility. This is one thing I'm going to look for price to fill this wick and potentially push higher. I do expect 1800, but like on the 5 levels, so 1785, 1790, 1795, and 1800. Those are the levels I'm going to be looking for in order for it to continue higher. I'll have to get rid of this box too. Overall, bullish, as I said. 4 hour, pretty bullish as well. Like even if it goes down to 1765, I'm going to have an alert at 66 actually. So let's put an alert at 1766. There's just everything, in my opinion, that will make gold bullish and hit 1800. I don't see any reason for gold to sell off unless it starts breaking levels pretty hard. I will write that down as well. I mean, if we go to gold futures, 1784, yeah, it's probably gonna, futures is gonna tap at 1800. It's always a leading indicator of where gold's gonna go. So it depends where the futures open up to. So I have an alert, 1766. I'm gonna put text there. And we're gonna go to the 1 hour to give you what I'm looking for. What was it on my previous gold analysis? So my previous gold analysis, and this was based off the 1 hour as well, kind of consolidation, but it literally just broke 1744 and went up. This is the review. Again, safe sells is still the same. When it starts breaking levels is a good point to sell intraday. And you have these big levels, that's the real sells. Other than that, it's just straight bullish higher. So I'm gonna make this pretty for everybody, including myself. So right here we have an alert at 1766 for lower wick. And top. Perfect. That's what I like to see. So there we have an alert there. For buys, we might get a sell-off here, maybe even to the bottom here. Consolidation, move up here. Whoa. Why does arrow look weird? No. There we go. I like that. That's what I'm talking about. Something like that. Tap into there. And then anything above here, continue higher. All right, so we got this. We got the range play within here. I'm gonna make this line so anything for sells, what I'm looking for, again, sells level to level, another level to level. 1739, I don't know if I expect 1744 was a bigger level, so if it does break that, we'll continue lower right there. And obviously big level to big level. Those are minor levels I have drawn out. Why is this one big? This one's just not. 39.5. 5. There we go. The thick levels are the big levels. So these stickies, I call them, the thicky zones, they're my big levels. As you can see, thicky zone, thicky zone, thicky zone, thin zone, thicky zone, thin zone, thick zone. So I like to play level to level on the thick zones. But yeah, no, that's basically what I'm looking for sells. There is no way that I would even look at buying that. Or I mean, selling it from up here, you're just trying to chase it. So basically same analysis, looking for like a weekly wick formation down, continue pulling momentum up. Actually, you know what? I'm gonna put an alert at 1759 as well. There we go. Here, alert. 1760. Because then you can prepare once it's there every time. Down. I got it. Zoom in. Go with that. Alright, so I got my alerts at 1760, 1766. And that's for a liquidity grab for the weekly to push higher. So let me write it here. You know what, I'm gonna put the arrow all the way here. So what do we have? I'm gonna write it down, put a text box here, text box here, text box here, and text box up here. Just a little bit smaller. To open the week. potential sell to grab liquidity as form lower wick weekly candle, or continue bullish momentum last week and continue bullish momentum from last week slash no lower wick mirroring move from last week's candle stick. So what that basically means for this is to open the week, we could potentially see sells to grab, or I'm gonna switch this order. There's a reason why I'll tell you why I'm switching this order. So why I'm switching this order? Boom. Perfect. So we could see a continued bullish momentum from last week slash no weekly wick slash no lower weekly wick formation. No. Continue bullish momentum from last week slash no lower weekly wick, which basically mirroring move from last week's candlestick. So last week's candlestick was I'll show it to you guys in a bit, it was just like straight bullish. Where did it open? It opened 23, 27, 24. What? Oh, right here. Right here. See how it made no lower weekly wick right here? So it basically just started shooting up right at open at 1741, just boom, straight up. So that might happen this week too, where it doesn't form a lower weekly wick and continue up. And that's one thing I'm expecting. Big resistance at 1780 level slash zone marked on chart 1779 to 1781. Price buys above this level would be played every 50 pips based on psychological numbers as well as previous levels from 2012. I don't want to draw out those levels yet, just for the fact that it might even like blow past those levels, right? Here I'm gonna put if weekly candle grabs liquidity slash sells off, looking for price to consolidate, then continue bullish momentum upwards. Price can reach 1766 slash 1759 slash 1751. Test support and continue higher. All right, there we go, right there. So I'm gonna write here, it's a bullish bias overall based on higher time frame market structure, easy buys for price to retest the highs created last week. We'll mostly be looking for buys when support is created / formed to continue momentum higher. There we go. That's basically what I'm looking for there. Okay. Should I add some news? Okay, let's look at some news quickly. So Monday, nothing much really. Obviously, dud day. Always Monday. I'm pending home sales. Damn, 18.9%. Is that month over month? That is month over month. How do you go from -20 to 18.9? Who the fuck's buying a house? Anyways, I don't expect it to be 18.9, maybe month over month. Yeah, people might have bought properties at a lower price. Like I know a lot of people that were planning to do that. Tuesday, Fed Chair Powell testifies again. That will probably move the market as always. ADP, non-farm employment change. Non-farm employment change. NFP, ADP, yeah, you got pretty big news. This is on Tuesday too, hey, unemployment rate and NFP. Oh, Friday's a bank holiday. Interesting. Oh yeah, it is long weekend, Independence Day long weekend. That means it's Canada Day. Is that a bank holiday? Yeah, Wednesday is a bank holiday. Okay, but now we got everything in line. We have an NFP week. Let me put this here. I'm gonna put Forex Factory on another screen so I can write all the news down. Whoa. News. Monday. June 30th. Pending home sales. 8:00 a.m. Mountain Time. Tuesday, June. Oops. 29th. 30th. Fed Chair. I'm just gonna write Powell testifies. Dude's always testifying. Oh yeah, you got consumer confidence. Chicago PMI 7:45 a.m. Mountain Time. Oh, I can't even go tab. Whoops. Okay. Perfect. Wednesday. On farm. Boom. There we go. Where does this news fit? Pretty sure I can leave it up there and then, yeah. There we go. We got that all done. Oh, I forgot cells. Damn it. Cells will be played level to level as drawn out on chart. Big zone to big zone with potential TPs set at smaller zones only if there is market optimism with a heavy selling pressure on gold. But I am biased. I have a bullish bias overall on gold. So yeah, no, it's gonna be a very interesting week to say the least. Why is this a crooked one? We good there. Save this, save this. See how it turns out. Not bad, I kind of like it. So I'm gonna put that on the side. Damn, a 42-minute breakdown, not bad. Some technical difficulties, but now we can see what I am looking for on gold. Give me one moment, I just want to delete all these arrows. Save. So that's basically the gold breakdown. It was pretty long. Some technical difficulties and whatnot. I was just trying to get everything in ready in order. See the higher time frames, the previous resistance from way back in 2012. Basically break down what I'm looking for on gold. Let's do a quick breakdown on USD CAD, Euro USD, Pound USD, Pound CAD market. So monthly on USD CAD, big liquidity grab, and damn, it rejected that whole area. Weekly, it filled this gap and continued to push higher. So it is on a bullish. Yeah, USD CAD is bullish overall. I guess with the dollar increasing, investors flocking to safe havens. You could see this push up to, I guess, 137.80-ish area. Play level to level again, 137 to 137.80. Easily attainable. If you go to the 4-hour, yeah, the bullish momentum should make this continue upwards to even 137.40. That ain't a bad play on USD CAD. About 50-60 pips from its price right now, and we can't see that because it broke out of its resistance, retested, and could continue higher. And it really depends on the price of oil as well. Thinking of that, let's look at oil quickly. Oil, yeah, bull move up, and it does look pretty bearish. Yeah, it broke this uptrend. It could easily test 36 this week, depending on market data, etc. What happens in the US, how the market reacts to the data coming up this week. Quite a few news events. Do expect the US dollar to go up, which would indicate most of the analysis playing out. Look at this on Euro. Euro monthly. Last month was pretty bullish, and this month started off pretty bullish. But now if we go to weekly, how many rejections do you have over here? 1, 2, 3, 4 rejections. Shoots up, rejects, pushes down. I think we're going to get the same thing this week. Shoots up and then pushes down to the end of the week. Breaks support. Anything below the support it created in the daily lows, you're going to see a push down. So below 111.70, the support, that's a clean move downwards. For the up move, you would have to see lower time frame, form bullish structure, and then continue upwards. Now, if we go to Pound USD, same thing. Look at that. It finished bearish on the week. It is on a bearish, yeah, the monthly could push down into bearish territory as well. Daily broke bearish. This one could easily test lower levels at like 122.80, 122.60, 121.60 as well. So there are confluences and like coinciding indicators where price could easily, sorry, give me a sec. Where price could easily sell off, and I do expect it on Pound USD, Euro USD to sell off. Pound CAD's really weird. Depends like how the price of oil is, but it's very choppy. There are intraday moves that do happen though. Like these ones, I got this sell off. Like there are some cleaner sells, but the wicks always go above. You need a lenient stop if you're gonna play it. But yeah, no. Overall, everything does look like. Let's look at the dollar. That's gonna give us the biggest indication. So yeah, if the dollar does break up upwards, then we see pound USD, euro USD fall, USD CAD go up. If investors do flock into safe havens, we could see the price of gold shoot up too, as investors flock into safe havens, and the best safe haven is gold. Market, like I showed earlier on FibViz, there could be a nice sell-off on the Dow Jones. So there's a lot of things to keep an eye on for. I did a pretty good breakdown on gold. I'll have my higher levels for Monday. I gotta figure out what those levels will be exactly, but we will get these higher levels. Overall, bullish. 1800 is expected to hit sooner or later, and that's one thing I want to play. Even the range in here to test 1780, I do feel like we test 1780 pretty easily. Even if you take buys around 1765, 1759, we're gonna test up here. That's one of the things I have. Anything above 1780, play every $5, so 1785, 90, 95, and 1800 eventually. But other than that, I hope the breakdown made sense. I'm gonna work on next week on how to cut it down a little bit. I know the week before was about 24 minutes on the video. This one was longer. I didn't really have my higher time frame levels drawn out. This bullish move was crazy over the week. I didn't expect it to continue upwards. It did. It hit 1779. It's easily gonna push higher. And once again, let me save this. I'm gonna exit this. I'm gonna leave you guys with this, the gold analysis at the end. So we have an alert, 1766, 1760. We have all this news data coming up. Big resistance, 1780. Easy buys above there. Continue bullish momentum from last week, or sell, create consolidation support, and then bullish move up. If weekly candles grab liquidity sell off, that's the price I'm looking for. These three levels. Sells will be played level to level as drawn out on the chart. Because when the sales do happen, they happen hard and fast. Hope you guys enjoyed Genco Institute for Trading gold analysis on June 27th. What I'm looking for next week. I hope you guys have a wonderful weekend.